Hello, everyone. Today is January 14th, 2026, and I just finished looking at the charts this morning, and silver has hit a new record, 66 pounds an ounce. I know many of you have been watching this move. I know many of you have been waiting for this moment, and this is very important. This is truly important because we have never seen levels like this in London trading. 66 pounds. This is an absolutely historic achievement. Now, what's interesting to me is what's happening with the traders over in London, because they're not happy. They're not happy at all. And I've been hearing from some contacts, and the sentiment is pretty grim. You've got a lot of people who were on the wrong side of this trade. A lot of people who thought that silver was going to pull back. A lot of people who were shorting silver thinking that this was just some temporary spike, some flash in the pan that was going to blow over. And now they're sitting there watching it hit 66 pounds and they're underwater. They're really underwater. And so what happens when traders are underwater? Well, they've got margin calls coming in. They've got positions that they need to manage. They've got risk departments breathing down their necks. And it creates this environment of stress and pressure that it's not pleasant. I've been in those situations before, and I can tell you it's not fun when the market is moving against you and you're trying to figure out how to manage your exposure and you're scrambling to come up with cash. Now, the really interesting part of all of this is JPMorgan, because JPMorgan has been awfully quiet. They haven't said much of anything about what's happening in the silver market right now, and that silence, to me, that's telling. That's really telling. Because when you've got a major player like JPMorgan and they're not commenting on a historic move in a commodity that they have significant exposure to, you've got to ask yourself, what are they waiting for? What do they know that we don't know? Are they positioning themselves for something bigger? Now, I don't have any inside information. I'm not claiming to know what JPMorgan is thinking or what their strategy is, but I can speculate based on what I've seen in the markets over the years. And what I've seen is that when the big banks go quiet, it's usually because they're repositioning. They're usually working on something behind the scenes. They're managing their books. They're figuring out their next move. And they don't want to tip their hand. They don't want anyone to know what they're doing until they're done doing it. So let me walk you through what I think is happening. Let's start with the fundamental, because that's really what's driving this entire move in silver. This isn't speculation. This isn't some irrational exuberance where people are just piling into silver because they think it's going to keep going up forever. This is fundamentals playing out in real time. This is supply and demand doing exactly what supply and demand is supposed to do when you have a shortage developing. We've got supply and demand dynamics that are completely out of whack. The demand for silver has been increasing year after year after year. You've got solar panels that need silver. You've got electric vehicles that need massive amounts of silver. You've got electronics, 5G infrastructure, medical devices, water purification systems. All of these things need silver. And then, on top of all of that industrial demand, you've got investment demand. You've got people who are looking at the monetary system and they're looking at inflation and they're looking at what central banks are doing with their money printing and they're saying, I need to own some physical silver as insurance. I need something real, something tangible. And on the supply side, we're not keeping up. We're just not keeping up. Mining production has been relatively flat for years. We're not discovering new deposits at the rate that we used to. The ore grades are declining. It's getting more expensive to mine silver every single year. And so you've got this situation where demand is increasing and supply is not keeping pace. And that creates upward pressure on price. That's just basic economics. That's supply and demand 101. Now, what happened with this move to 66 pounds? Well, it's been building for a while. This didn't happen overnight. If you look at the charts going back to late last year, you can see that silver has been in a strong uptrend. It broke through some major resistance level. It broke through resistance that had been holding it down for years. And each time it breaks through a resistance level and holds above it, that resistance becomes support. And that's exactly what we've been seeing. And so when we hit 66 pounds today in London, that's a psychological level. That's a level that gets people's attention. That's a level that makes headlines. And when silver makes headlines, that brings in more buyers because people see the headlines and they say, wait a minute. Maybe I should own some silver. Maybe I've been missing out on this. Maybe this is the real deal. Now let's talk about what's happening in London specifically, because London is one of the major trading centers for silver. You've got the London bullion market. You've got the LBMA. You've got a lot of institutional players who are active in that market every single day. And when you've got a move like this, it creates winners and losers. And right now, there are a lot of losers in London, a lot of very unhappy traders. The traders who are sad, The ones who are really feeling the pain right now, these are the guys who were short silver. They were betting that the price would go down, or maybe they weren't even betting that it would go down. Maybe they were just hedging some other position. Maybe they were market makers who were providing liquidity, and they ended up on the wrong side when this thing took off. Whatever the reason, they're sitting there with losing positions, and they've got to figure out what to do about it. And that's not an easy decision when you're staring at massive losses. And when you're in that situation, you've got limited options. You can hold on and hope that the market turns around, but that's risky because the market could keep going against you. It could go to 70 pounds. It could go to 80 pounds. Who knows how high this thing can go when you've got fundamentals like this driving, or you can cut your losses and get out. But that means you're realizing those losses, and that's painful. Nobody likes to take a loss, especially a big loss. And if you've been short silver from, say, 50 pounds or 55 pounds and now it's at 66, you're looking at a significant loss. That can add up to some serious money. So what do these traders do? Well, some of them are probably covering their shorts right now. They're buying silver to close out their positions. And when they buy silver to cover their shorts, that creates more buying pressure, which pushes the price even higher. It's a feedback loop. It's what we call a short squeeze. And short squeezes can be absolutely brutal if you're on the wrong side of them. We've seen this happen before in other markets. And when it happens in silver, it can be even more dramatic because the silver market is relatively small compared to other commodity markets. Now, I mentioned JPMorgan earlier, and I want to come back to that because I think it's really important. I think it's one of the key things we need to be watching right now. JPMorgan has a history in the silver market. They've been accused of manipulation over the years. There have been lawsuits. There have been settlements. There have been traders who've pled guilty to spoofing. There have been a lot of questions about their role in the silver market and what they've been doing behind the scenes. And I'm not here to make accusations or to say that they're doing anything wrong right now. I'm just pointing out that they're a major player. They're one of the biggest players in the precious metals market, and their silence during a move like this is notable. It's very notable. When a major bank like JPMorgan goes quiet during a historic move in a market where they have significant exposure, you've got to wonder what they're thinking. Are they long silver right now? Did they see this coming and position themselves accordingly? Or are they short and they're trying to manage their risk without causing a panic? We don't know. But their silence suggests that they're very carefully managing their position. They're being very deliberate about whatever they're doing. One possibility is that JPMorgan is just waiting. They're waiting to see how high this goes. They're waiting to see if there's going to be a pullback. They're waiting for the right moment to make their move. Because if you're a big player in the market, you can't just go in and buy or sell massive amounts all at once. You'll move the market against yourself. You've got to be strategic. You've got to be patient. You've got to work your orders carefully so that you don't tip your hand to the rest of the market. Another possibility is that they are actually long silver right now. Maybe they accumulated a large physical position over the last few years when prices were lower. Maybe they saw this coming. Maybe they looked at the same fundamentals that we're all looking at and they said, this is going to run, and we need to be on the right side of it. And if that's the case, then their silence makes perfect sense. Because why would you talk about your winning position when you're still accumulating or when you're waiting for even higher prices? But there's also a third possibility, and this is the one that I think is worth considering. Maybe JPMorgan is in a difficult position right now. Maybe they have some short exposure that they're trying to manage. Maybe they have clients who are short silver, and they're trying to help those clients navigate this move without taking catastrophic losses. And if that's the case, then their silence is about damage control. It's about not making the situation worse by saying the wrong thing at the wrong time. Now, what does all of this mean for where silver goes from here? Well, I think we need to look at the technicals, and we need to look at the fundamentals, and we need to put them together to get a complete picture. From a technical standpoint, 66 pounds is a breakout. It's a new high. And when you break out to new highs, there's no overhead resistance. There's nothing holding the price down above you. The only thing that can stop a breakout is profit-taking or a change in the fundamentals. And I don't see the fundamentals changing anytime soon. Now, could we see a pullback from here? Absolutely. In fact, I would expect a pullback at some point. Markets don't go straight up forever. They need to consolidate. They need to digest the gains. They need to let some of the weak hands get shaken out so that the strong hands can accumulate more. And I know everybody hates it when I say stuff like that. But pullbacks are healthy. Pullbacks are normal. Pullbacks give you another chance to get in if you missed the initial move. If we do get a pullback, I would be watching some key support levels. I'd be watching to see if we can hold above 60 pounds. I'd be watching to see if we can hold above the 50-day moving average. Because if we pull back and then find support at one of those levels and then bounce back up, that's confirmation that this bull market is real. That's confirmation that this isn't just some flash in the pan that's going to disappear. But here's the thing. I don't think we're going to pull back very far. And I don't think we're going to stay down for very long if we do pull back. Because the fundamentals are just too strong. The supply and demand situation is just too tight, and the awareness of what's happening in silver is starting to spread. More and more people are figuring out that silver is undervalued relative to gold. More and more people are figuring out that there's a shortage developing. More and more people are trying to get their hands on physical metal. And that brings me to another important point. There's a big difference between paper silver and physical silver. When we talk about the price hitting 66 pounds, we're usually talking about the paper price. We're talking about futures contracts. We're talking about ETFs. We're talking about derivatives. But the physical market is a different animal altogether. In the physical market, premiums are going up. Dealers are having trouble sourcing metal. Delivery times are getting longer. And the spread between the paper price and what you actually have to pay to get physical metal in your hands is widening. And that spread, that's telling you that there's stress in the system. That's telling you that the paper market and the physical market are starting to disconnect. And if that disconnect continues, if it gets worse, then we could see something really dramatic happen. We could see a situation where the paper price is one thing and the physical price is something completely different. We could see a situation where people who thought they owned silver through paper contracts realize that they can't actually get delivery of physical metal. And if that happens, that's when things could really get interesting. Now, I'm not predicting that this is going to happen tomorrow or next week or even next month, but I am saying that we need to be aware of the possibility. We need to be watching for signs that the physical market is tightening. We need to be watching premiums. We need to be watching delivery times. We need to be watching what dealers are saying about their ability to source metal. So, what do I think happens next? Well, I think we're in the early stages of a major bull market in silver. I think that this move to 66 pounds is significant, but I don't think it's the end. I think we're going to see higher prices. I think we're going to see much higher prices. And I think that the people who are positioning themselves now, the people who are accumulating physical silver now, they're going to be very happy a year from now or 2 years from now. But I also think that we need to be prepared for volatility. We need to be prepared for pullbacks. We need to be prepared for the possibility that the powers that be are going to try to knock this down, because they always do. Whenever silver starts to run, whenever it starts to attract attention, there are forces that try to knock it back down. They raise margin requirements. They manipulate the futures market. They do whatever they can to protect the shorts and to hurt the longs. And that's why I always say just stick with physical silver. Don't mess around with futures contracts unless you really know what you're doing and you've got the capital to handle the volatility and the margin calls. Physical silver has enough leverage all on its own. We've seen that in this move. We've seen how fast it can move when the fundamentals are right. Now let me talk about what I'm watching for in the coming days and weeks. First, I'm watching to see how London traders react to this new high. Are they going to capitulate and cover their shorts? Or are they going to dig in and try to fight it? Because if they try to fight it and the price keeps going up, that short squeeze could get really intense. Second, I'm watching JPMorgan. I'm watching to see if they say anything. I'm watching to see if there are any reports about their positioning. I'm watching to see if there are any unusual movements in the market that might give us a clue about what they're doing. Third, I'm watching the physical market. I'm watching premiums. I'm watching what dealers are saying. I'm watching delivery times, because that's where the real action is. That's where you can see the true state of supply and demand. And fourth, I'm watching the broader macro environment. I'm watching what's happening with currencies. I'm watching what's happening with inflation. I'm watching what central banks are doing, because all of those things affect silver. All of those things are part of the reason why silver is moving the way it's moving. You know, we're living through a historic time in the silver market. This isn't something that happens every day. This isn't something that happens every year. This is the kind of move that happens once or twice in a generation. And if you've been stacking silver, if you've been accumulating physical metal over the years, then you're in a good position right now. You're sitting on gains. You're seeing your foresight pay off. But for those of you who are just getting into silver now, I want to say this: don't chase the price. Don't go out and buy a huge position at the top and then panic when it pulls back. Dollar cost average. Buy a little bit at a time. Build your position gradually, because this is a long-term play. This is not a get-rich-quick scheme. This is about protecting your wealth. This is about having something real in a world of paper promises. And I'll tell you something else. The traders in London who are sad right now, they're sad because they were on the wrong side. They were betting against silver. They were betting against the fundamentals, and the market has proven them wrong. The market always wins in the long run. You can manipulate it for a while. You can knock it down for a while. But eventually, the fundamentals assert themselves. Eventually, supply and demand do what they're supposed to do. So what's JPMorgan waiting for? I don't know for sure, but my guess is they're waiting to see just how far this can go. They're waiting to see if this is going to turn into something really big. And maybe they're waiting because they know something that we don't know yet. Maybe they've seen the data on physical inventories. Maybe they know how tight the market really is. Maybe they know that this is just getting started. Or maybe they're waiting because they're in trouble. Maybe they've got exposure that they need to manage carefully. Maybe they're trying to figure out how to get out of a bad position without causing a panic. We'll find out eventually. These things always come to light sooner or later. But in the meantime, we can watch the price action. We can watch what's happening in London. We can watch what the other big players are doing. And we can make our own decisions about how to position ourselves for what's coming next. Because here's what I believe. I believe that silver at 66 pounds is not the top. I believe that we're going to see triple-digit silver in pound sterling. Now, I believe that we're going to look back on this moment and say, that was just the beginning. That was when it really started to take off. Now, am I going to be right about that? Time will tell. The market will tell us. But based on everything I'm seeing, based on the fundamentals, based on the technicals, based on the way the big players are positioning themselves or staying quiet, I think the odds are in favor of higher prices from here. And so, what am I doing personally? Well, I'm not giving financial advice. I never do. I just tell you what I think and what I'm seeing. But I'll tell you this. I'm not selling my silver. I'm not taking profits at 66 pounds. I'm holding, because I think this has a lot further to run. And if we get a pullback, if we get a chance to add to positions at lower prices, I'll be looking at that as a buying opportunity. Just like I said in the document you read from me before, whenever there's a pullback in a bull market, that's usually a good time to accumulate. That's usually a good time to add to your position, because the bull market isn't over. It's just taking a breather. It's just consolidating before the next leg up. So to all the traders in London who are sad right now, I say this. Maybe you should stop betting against silver and start betting with it. Maybe you should look at the fundamentals and realize that this isn't going away. This is real. This is happening. And it's going to continue happening for reasons that have nothing to do with speculation and everything to do with supply and demand. And to JPMorgan, wherever you are, whatever you're doing, whatever you're waiting for, just know that we're watching. We're paying attention. We see your silence and we're wondering what it means. And eventually, we'll find out. The truth always comes out in the end. I want to thank you for watching. I hope this gives you some perspective on what's happening in the silver market right now. It's a historic moment. 66 pounds, new record, London traders unhappy, JPMorgan silent, and all of us wondering what comes next. We'll see you next time.